All right, we're going to bring you all back a little bit later. Thank you. In the meantime, I'm going to go to Idaho Republican Senator Mike Crapo. He's on Capitol Hill, a member of both the Banking and Finance Committees. So, Senator, I'll ask you as I ask the others. Do you think this was a witch hunt and they hunted the guy down?
You know, clearly the public and Congress, as has been indicated by some of your guests, have been very involved in trying to micromanage and evaluate every different aspect of what's happened in Wall Street and in our financial world in the United States as a result of the credit crisis and the mortgage crisis that we have gone through. Regardless of what happened in this particular instance, I think it's an example of the kind of thing that we are looking at here in Washington that can be much bigger for America. We're looking at a comprehensive health care bill right now, but at the same time, Congress is evaluating major financial regulatory overhaul that is potentially going to change the way that our financial markets work as much as the health care bill could change our health care system. And I think Americans need to pay attention to it.
All right, do you think Ken Lewis should have lost his job?
I don't know enough details about whether there was any kind of fraud or any kind of inappropriate behavior on his part to be able to register an opinion on that. But what I can say is that the question, and with the increased attention from Congress in looking at what did happen at Bank of America, is something that is going to play itself out into a much larger regulatory debate that we have here in Washington. And
well, you hit on something, Senator, you hit on a profound point there, because the fear in the financial community, as is the fear with health care, is that government will be calling the shots. And for all we know, it was the government that shot Ken Lewis. It wasn't Bank of America or the board. It was the government saying, Ken, you got to go. And just as the government pushed out the chairman of GM, the government now, with full financial control, is doing effectively the same here. What do you think of that?
I think there's a very big danger here. And if you look at it, the United States government has moved into either ownership or control of major parts of our economy in the last 12 months. You look at the Fannie Mae and Freddie Mac now in receivership, the largest insurance company in the world, AIG, controlled by the federal government, the major controls that are now being exerted in the banking world, and the takeover of the auto industry with GM. And the point I make is that we see an incredible move by the federal government into very significant increased management and control of our private sector. And we now have regulatory reforms that are going to extensively move the government further down that road in terms of the potential for literally taking a different approach to how our economy operates in the United States.
Senator, there has been talk that Ken Lewis was not a fan of redoing these sort of salary caps that many in the government were looking at. In other words, this international agreement, I think at the G20, where they were saying, we're going to try to regulate pay at financial institutions. The big guys, you know, and just, I think after they were all done, it was down to the secretaries and the janitors. I don't know. But what they were saying effectively, Senator, is that whether you're on the public dole or not, we are going to police this stuff. Now, Ken Lewis was among those saying, well, you want to go slow there. Now, I'm not saying that that was a scarlet letter comment, but I'm sure it didn't help. Do you share financial CEOs' concerns that the government is dictating too much?
I do. I don't personally believe that Ken Lewis's beliefs there were a big part of the reason that he was pushed out. A lot of people have expressed those kinds of concerns, and I share those kinds of concerns. The federal government should not be moving so extensively into the management of the private sector. Now, we do need to have concern about the salaries and the compensation system of which is used for the CEOs of major financial institutions in our country. But the reason is because we want them not to be incentivized for short-term earnings or short-term actions that can impact their stock values, which are not in the best interest of the long-term strength of the company. And it's those kinds of issues that I believe are taking a stronger hold here in Washington. There are some here who literally want the government to step in and set the salaries in the private sector. I'm not one of those, and frankly, I don't think that there is a majority here to do that. But there is a very strong will here to evaluate whether the compensation system in our financial world is something that is driving very dangerous systemically risky short-term decisions that are not in the best interests of our economy.
Senator, thank you, and indulging all this breaking news. We appreciate it. Thank you again.
Thank you.